Heartbreaking to see people's homes inundated with water or destroyed by catastrophic weather events. But what are the long-term effects on property insurance?
Welcome to Your First Home Buyer Guide, the podcast for first home buyers who want to get it right.
I'm Megan and that was Veronica. We're both buyer's agents and probably old enough to be your mums. But that's a good thing because between us we've got over 40 years experience and we are going to share with you bucket loads of stories about avoidable mistakes. Together, we're going to make sure that you get unbiased and real information that you can rely on so you can get where you want to be without missing a step.
Now, we've got loads of great tips for you in this episode, and if you'd like more useful tools, head over to the website homebuyeracademy.com.au. There you'll find free checklists that you can download, a free mini course on how to price a property, and our Where to Buy workshop for only $39. Priceless stuff, really.
Bargain. But before we get into the interesting stuff in this week's episode, here's the boring bit, the disclaimer. You, of course, know that nothing in this podcast is to be taken as personal advice. We always recommend getting the advice of an expert in their field of expertise. Now, we've done our very best to ensure that the content is correct at the time of recording, but things change. So check with the relevant government authority or your advisors to get the most up-to-date information.
Today we're talking about climate change and how it relates to property insurance. And it's a biggie, okay? But before we get into that, we have a bit of a special house behind you in the video this week, Megan.
Look at this. Look at this. So this is in Prague, and it's probably one of Europe's most recognisable buildings. And it was first nicknamed Fred and Ginger, after the dancing duo, but it really polarised opinion in the city. So there's lots of Baroque and Gothic structures through Prague. And love it or hate it, you have to agree that the dancing house, which is what it's called, the dancing house is pretty cool.
It does look like somebody took a blowtorch to one side and it melted a bit. It is pretty cool, and I tell you, it's starting to make me feel very travel-sick.
Ready for travel.
Hey. All right. Well, I guess what we need to get into is the topic at hand. And this is a real issue.
Sounds boring, but it's really important.
Yeah. You imagine that you save, you squirrel, you get your deposit, you finally find that property, you finally buy that property, you get to the top of the mountain, as we say it is, and then you find you can't insure it. Oh, that'd be a bit of a rude shock, wouldn't it?
It's so expensive that you can't afford to insure it. Now, massive disclaimer here, Veronica. We are not giving insurance advice. This is not an episode about insurance.
Nope.
You need to speak to a specialist about that. But this episode is exploring the impact of climate change and what's happening on your potential ability to insure your home now and into the future. And that's important.
Yeah, and it is very important because let's just look at what happened in Lismore recently. That's just picking one example. And you watch the news and you quite often heard this sort of same story. And it is, well, when I first bought my home, I insured it. And then we had the first flood. And then the insurance company paid out. And then I went to reinsure it and I couldn't afford to reinsure it. So I didn't insure my home.
Skyrocketed.
Yeah. Then I didn't insure my home. And then the next flood comes through and I'm no longer covered. And you are then totally at the mercy of government handouts and support. And there's a bigger argument there as to, well, who's really responsible ultimately. But, so even the fact that you can insure it when you first buy it doesn't necessarily mean you're going to be able to insure it throughout your years of ownership. So this is really a big issue.
It is. And when you buy your first home, it's really important that you get the right insurance. And we talk about this in the course. It's a very big part of managing your risk. It helps cover certain events. So most insurance policies have defined events that are covered and some that aren't. And usually this is a building and a contents policy that you'll take out if you're going to live in the property that you've purchased. So as a homeowner. The contents part is anything that falls out. If you turn the building upside down, shook it, contents is what falls out. So that's how it's been explained to me. I love it. That really works for me as a visual person. The building side is how much it would cost to replace all of the insurable structures on the land, but not the land itself. So some people make the mistake of thinking that they insure what they've purchased for the purchase price, but you actually don't insure the land. The land, the land isn't going to go anywhere. So it's the things, the improvements, if you like, that are on top of the land, not the land itself.
Funny story. When I first bought my first ever property way back in my 20s, and it was an apartment, and I just knew I had to get insurance. I was always very conscious like that. I used to always insure my cars before I actually drove
manage
them,
your
all
risk.
that sort of stuff. Yeah, absolutely. So I rang up an insurance company and clearly spoke to somebody as clueless as me, because I then wanted to
helpful.
And I wanted to insure. I thought I had to insure the apartment, right? And they actually gave me a cover note to insure the apartment, right? Which is ridiculous, because you can't insure an individual apartment. You can insure your contents.
Yeah.
But I didn't actually need to insure the building. The strata looks after insuring, or the owner's corporation looks after insuring a building if you own a strata lot or a community title lot. But this clueless person on the end of the line who actually gave me a cover note, and
the building
and then
that you didn't own.
When I went to settle on that property, and then I call up to go, right, well, I better pay my premiums. Back in the olden days before the internet, and the person I spoke to that time wasn't clueless and sort of laughed and chuckled at me and said, you can't insure the entire building.
And if you did, it would cost you a lot of money, and that's what you pay strata levies for.
That's exactly right.
Part of the insurance.
Anyway, I had to laugh, and I was pleasantly surprised because I only had to pay for contents insurance.
Spot on.
There you go. Just shows sometimes you just don't know what you don't know.
Absolutely. And clearly neither did the person who was not trained on the other side of things. Anyway, we digress. But insurance companies do use a huge amount of data to determine what the premium will be on individual properties. But to give you an example of what effect climate can have, and some of these events can have on individual premiums, our state member up here for Cooper, Jonty Bush, who's Brisbane area, sort of Ashgrove, Paddington sort of area, shared a premium renewal notice for one of her constituents that went from about $3,300 to over $8,800. So, and this was a property that did not flood. They didn't make a claim in the previous insurance period. So there was no reason apart from what was happening around them and in the broader context. So it wasn't actually their individual circumstances that led to their premium increase. It was the circumstances that sat around them.
Wow. Yeah. Which, remember back to the 2011 floods in Brisbane, and there was
clearly.
Well, you would, yeah. There was a lot of controversy at the time. We were filming up there. We were filming the show up there sort of not long after that. And I was actually, it was pretty confronting. But Suncorp, I think, was the only insurance company that actually had a flood cover as part of their
automatic.
As of their events that they cover, which was sort of interesting because it made Suncorp look like a bunch of heroes, and potentially maybe one of those premium renewals would have been for other companies would then put under pressure to cover floods, and all of a sudden, of course, their premiums are going to go up. So, I mean, some people may well have chosen cheap insurance, not realizing they weren't even covered for floods potentially. It just shows you
just assuming it was part of it. And that's the thing, isn't it? Because these are defined events policies. So you're only covered for specific events. So it's as important to read the defined events that are covered as the exclusions. And that's why you've got to really sit down with those product disclosure statements and understand what's excluded. Because if flood is excluded, it may be the water ingress is included if it comes from the roof, but not if it comes up from the creekways. So, even different types of water events have different insurable events and claimable events. So really important to understand in a policy what that means. And even being on a hill, and I talk about Brisbane being a hilly, the topography being really hilly and lots of overland flow paths down hills. You can flood on the incline of a hill because the water comes down and it pools in certain places. So you've got to understand what part of the policy does or does not cover that kind of event. Because if you've got water coming in, around the outside and in through under the door, is that a different type of event to something that might come through a hole that was made in the roof by a branch or a storm blowing off a piece of sheeting or something like that. So really important to look closely at those. These are just things that I've actually seen. I actually saw the premium notice that she shared online. She didn't identify who the insurer was nor the insured, but I saw that actual premium increase notice. But we've heard rumours of people in riverside suburbs whose properties did not flood receiving premium increases from about $6,000-7,000 up to about $45,000 increases. And these are properties who individually didn't flood or claim, but because of the amount of data points and what the actuaries use in the insurance game to calculate premiums, they look at stats, and they look at events within postcodes, and they really don't look at your individual properties. So you've got to be aware what's happening around you as well.
Well, they're looking at risk. And so if you think about it from a buyer's perspective, what better indicator of risk of something going wrong than if an insurance company is basically only prepared to insure it if it's a ridiculously high premium.
Yeah, good.
Ew.
You found an article recently in the Sydney Morning Herald. It was a Sydney Morning Herald, that Australia is, and there's some quotes we'll refer to here, but Australia is fast becoming an uninsurable nation, according to modelling released by the Climate Council. Now, obviously, there's an agenda here, so we're not saying that this is unbiased information, but it is good information for you to have when you're starting to make decisions about which area, which property, what's the risk of what you're purchasing.
Well, actually, we'll include the map in the show notes here, because you can actually go in there and have a look yourself as to whether you're looking at buying in a really risky area or not.
Pretty much everywhere, by the way. We'll get to that map in a minute, but pretty much everywhere up and down and around the coast is high risk for a lack of insurance.
Water or bush.
Yeah, but 1 in 25, now their estimate is 1 in 25 properties will be effectively uninsurable in just 8 years. 8. That's in our ownership life cycle, with figures as high as 9 out of 10 in the worst affected suburbs. So fascinating to have a look at that map and what information got. They used hundreds of data points to actually pull this thing together.
But also, not only, and I guess what you have to think about, of course, is, the risk of these things happening to you and the inconvenience and the cost and just how devastating that can be, but also to property values. And we did do an episode a few weeks back on buying in flood zones. So we released that in May, I think.
It's definitely out. Yep, we've had some comments on that one.
And we talked about the impact on property values of flooding. Right. And certainly whole areas will be impacted. The values in areas will be impacted if you get a situation where 9 out of 10 houses can't be insured. That's pretty dramatic.
Yeah. It actually also highlights, if there is any event like that, how important it is to get photos and videos that are time-stamped, so that if your property is one of those ones that is in an elevated position, is not affected, then you've actually got evidence to support your claims when you go to resell, or if you're going to have a go at getting a premium reduced, which good luck. But you can always try. But that evidence, date stamped and proven, can be helpful in a lot of scenarios. So really important when you do become an owner of a property that you make sure that you're always gathering that information that might be useful if someone questions whether you did have. And I know people who the entire street was gone, but they were just like a little island. Now, it's not ideal to be stuck as an island, but you're only an island for maybe a day versus next door, which might have been inundated, or across the road that had raging floodwaters going through it.
Well, I think it's important too to understand that not all floods are the same. So there are places that flooded under one flood, and then another one comes even within weeks. There's been separate, another flood, and previously unflooded houses got flooded in the second one, and the other way around, so
the major water sources.
Or where the rain's falling as well.
Yeah. Now, any home that will incur, what Climate Council is referring to is any home that will incur annual damages from extreme weather. So not just floods, but we're talking bushfires and cyclones and catastrophic storms. So extreme weather and climate change equating to 1% or more of the property's replacement cost is considered high risk. So I'm going to give you an example of what that is in a moment. It's not a lot. So if you think about a $600,000 property, if there is a risk of damage of $6,000 or more, it's considered high risk.
On an annual basis.
There wouldn't be many. There wouldn't be many insurance claims that aren't at least that in any event.
Yeah.
So that becomes inaccessible. If premiums go up significantly, it becomes inaccessible and unaffordable to insure, or becomes uninsurable altogether.
Well, I think, and one of the issues that has been highlighted, certainly in the recent flooding, has been that typically the lower income buyers and renters are sort of forced to go to those riskier areas where housing is cheaper.
It's cheaper.
And, and they can not cope. They really can't bear that risk, but you got to have a roof over your head, right? And so this is actually, I think, increasing disadvantage in many areas, this whole problem. And then, of course, if they can't insure what they have, it makes it even worse. So just that gap between those that do and can afford to protect themselves versus those that can't, we've got a lot of issues here in terms of housing policy and to tackle this sort of stuff. But from your point of view as a listener, if you're looking at being a homeowner, and we encourage you, obviously, to do that. We want you to do it safely. So it's really about being very aware of these.
Understanding and risk.
Yeah, and not falling and not also being lured into potentially a more affordable housing without understanding potentially whether this is a risk that applies in that instance.
Yeah, worst case scenario, if you were to choose a lower price house because it felt like a more affordable option, and that house was uninsurable, or you chose not to insure because the costs were so high, and something completely devastated, flattened, or took away the livability of that property, are you in a position to rebuild it, to live in it again? Or would you suffer a loss of having to sell it in its devastated state at land value?
Yeah. Pretty horrible,
that's a worst case scenario. Now, if you're interested, check out the climate risk map online that Veronica mentioned earlier. We've put the link in the notes. Now, they've used millions of data points provided by Climate Valuation, which provides climate risk analysis to property owners. And they've put all of that into this, producing the Climate Council's new interactive map. Really interesting. I fiddled around with it, and there's some pretty risky areas. And we're not just talking, in the next 2 years, 3 years, but they actually look at the long-term risk as well. So whether it's fires, floods, extreme winds, and you can break it down by suburb, local government area, or electorate. And it's based on, Veronica,
low, medium, and high emissions scenarios, which is all about, I guess that's about the growing awareness that if we don't do anything, from a world standpoint on emissions, this is going to get worse.
Yeah,
quite dramatically. We're at the tipping point, I think.
Yeah, I think it is. And I think, people like me that have often sat back and gone, climate change, I'm watching, I'm not dipping my toe in either side. People like me are really starting to understand that there is a massive impact on our livability, on our lifestyles, on our costs of living. All of these things are actually a result of some of the things that we are doing to the environment that are having a causal effect on climate change. So I think really starting to raise the awareness of some of us who have just lived quite happily in the knowledge that the world continues to change, but now we have to change the effect that we have on the world.
Well, and a bunch of you Queenslanders, it's pretty amazing, in the last federal election, Greens getting into the House of Reps in Queensland.
Well, we have
amazing.
We have so Griffin and Brisbane are both Greens now.
Who'd have thunk?
Would have thunk it? Watch this space.
Absolutely. So obviously the awareness is really increasing if Queenslanders actually start voting Greens. So,
I'm in the capital city. I don't think there was many votes for them in the country.
No.
But what this means for you and I is there may be a point in time where insurance becomes unaffordable, and we have to make some very difficult decisions about whether to self-insure. Self-insurance is a massive risk to take. It means that you have to have the ability to pay for your own repairs if an event happens that causes grave damage to your property. Now, some people can and will take that self-insurance risk, and some people just actually can't. It's just not a possibility.
And I think from a first home buyer's perspective, the problem with self-insurance is that obviously it takes you a long time to build up that amount of money that will actually allow you to cover off any damage if this happens. So you've got to, hope nothing happens in, the first 10 years of ownership or however long it takes to build up that significant nest egg. But also, early on is the time when you can least take the risk of losing that, because that is all you have. You know what I mean? Like you've just, all your savings gone into buying that property. So insurance is a very, very important issue for all of us, but particularly for first home buyers. And obviously I think this has to come into the whole criteria around what property to purchase. And, you know, I think the idea, even adding into due diligence process, I'm starting to think even in my business, it's time to say, well, we need to get an insurance quote.
Yeah, as part of the due diligence process. Because when you do those quotes, and it's better to do, you can do it online, but it's actually better to talk to somebody as well, because you can start to ask questions about, well, if I was in this postcode, what would the quote be? And if I was in this postcode, what would the quote be? And you can start to understand the differences between different locations and how insurance premiums might change by location.
Yeah.
Good intel together.
We're sort of used to this with our cars. You know, if you move addresses and all of a sudden your premium goes up or down, you go, oh, feel good if you move into a safer area, and you feel pretty shitty if your premium goes up. I've had that happen, you know, the premium's gone up. My premium never seems to go down. It seems to be I keep moving into dodgier areas. Anyway, that's another whole topic.
Lucky we don't trade in cars. Look, and I think you're right. It may mean that we use very different criteria to determine what property to purchase, not just, you know, we talk about the 3 Ps: position, property, price. You know, position is actually part of that equation. And you know, well, actually, this assessment may form part of that equation. You know, which position, which location, which suburb, which part of the suburb am I going to look at, and which property type within it is going to be potentially uninsurable, because if it is uninsurable, it may well be a showstopper for you, and it is worth knowing that before you enter into a contract or a purchase on a property. But you can also find out that it's a high premium and say, I'm prepared to take that risk, but better to know it before you're committed to something than after the fact. In this episode, we've covered a very small part of our 10-step online course for first home buyers. If you would like to learn more about the process and how to buy without making a mistake, then head over to our website, www.homebuyeracademy.com.au. Don't forget to subscribe to the podcast so you won't miss an episode. And if you like what you've heard today, please give us an iTunes review. 5 stars would be wonderful. It will help others find us as well.
Thank you for joining us. We hope you found this really useful. And if you have, please share the love with others who you know are in the same boat. We'll be back next week with some more priceless stuff.